I'm going to use the keyword for obvious reasons of tempting fate, so let's say it was a tranquil Thanksgiving trading session yesterday where, frankly, markets did not do particularly much at all. The only notable move that we saw on the day yesterday actually came in the gilt complex, with 10 and 30-year yields rising a handful of basis points apiece as market participants continued to digest Wednesday's budget, and I think really continuing to drill down into the detail of that budget, which of course increases spending substantially in the short term before the tax hikes to pay for that spending are very much backloaded towards 2028 and 2029, one of which could be an election year here in the UK. And obviously that somewhat stretches the credibility of Chancellor Rachel Reeves' fiscal consolidation plans. Outside of the gilt complex, there really isn't particularly much going on, and that's not surprising with US participants away. And of course, those dozy trading conditions really not helped at all this morning by CME products being halted by an exchange issue, which we are still waiting to be resolved. Even as and when that exchange issue is resolved, the day after Thanksgiving isn't exactly the ideal day to be expecting a significant amount of volatility either, if we're being completely honest. Certainly not with the economic docket completely and utterly devoid of anything interesting. So I think participants are already starting to focus on December and the final trading month of the year, although it must be said that next week doesn't look particularly busy either. Of course, the November jobs report has been delayed until the 16th of next month. So besides a handful of services and manufacturing PMI figures and the ADP employment stats out of the United States, there probably won't be a lot for traders to get their teeth into next week either. Having said that, the one thing that is of note is that we are about to enter the Fed's pre-meeting blackout period, which starts at close of play today, and money markets continuing to discount as near as makes no difference a 90% chance that the Fed will deliver a 25 basis point cut at that meeting on the 10th of December. Given that the Fed, well, we all know the FOMC do not like to surprise market participants. If we go into the blackout with odds sat at 90% or even 80%, you've got to assume implicitly at least that the FOMC are content with that pricing, and as a result of that will likely deliver on that pricing with a third straight rate cut at that December meeting. So I think that's really now starting to become market participants' focus, switching towards that FOMC meeting on the 10th of December. In the meantime, another day of twiddling thumbs over Thanksgiving probably awaits for most.